Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday evening, the 14th of May, 2024, the time about 5:40 p.m. Central Time. All right, my friends, stock market up again tonight. You know, the CPI numbers came in hot, but the market elected to focus on the revisionment in March, where it went down from a gain of 0.2% to a decline of 0.1%, and that took the headline for the market. At first, it wasn't that way. The market dropped in the stock market off the headline numbers of both the monthly and the yearly PPIs, but then it came roaring back as traders said, oh, but there was a revisionment in March. It makes no sense to me, but that's what the market did. Leave it at that. Metals are all higher, and there's a complete squeeze still going on in the copper. You know, months ago, this year, I said to you, I thought copper was a $5 commodity. You hit $4.90.55. So I don't think I was far off in what I was saying, and I think it's going there. You've got a very mixed bag tonight on what's going on the energy, on the currencies, but I still say the pros are selling short the yen to test the Japanese government. You're sitting still in the bonds and notes as the market wants to see at 7:30 in the morning what the CPI numbers look like. And you had a series of API numbers come out in the products and in the oil itself that were a bigger draw overall than the market by far was looking for. So that gave the market a little bit of a bid early on. Let's take a look, if we could, at what we've got. We have the Mortgage Bankers Association coming out with the indices at 6 in the morning. They're probably going to be something stable. The market's used to a 7% mortgage now. I hate to say that in an arm just around the 5.5–6% number. So we'll see what that does. We're going to see the New York Fed Empire State Manufacturing Survey for May. And we have seen upticks, downticks. I don't know what to expect in that. Advanced retail sales. So if you go by the Red Book Group's weekly sales, they keep climbing. They were 4%, then 4.5%, then the 5s, 5.5%. Today they're 6.3%. That's the strongest reading we've had in a very long time. So I would assume retail sales are still going to show a consumer that looks good. Does it mean it has to? I don't know. But, you know, the indicators of the weekly Red Book look good. Then we're going to get the U.S. April CPI. Now, the headline number in annualized terms is up, looking for it to be forecast up 3.4% from the year-ago month, and the core year-over-year up 3.6%. So those are the benchmarks you have to deal with. The naysayers will play with that no matter what happens with the number. They will find a reason typically to say, nah. Even though the Fed is saying that they're going to hold and that Fed Chair Powell today in Belgium said he is uncomfortable with the inflation readings that have recently been coming in, they'll go, he needs Pepto-Bismol. He's drunk something that he shouldn't have drunk or eaten something there. Get rid of it. Come on, Jerry. All right. Next thing, the National Association of Home Builders. They're going to release their housing index. All right. You know, housing's been a real problematic number. We all know that. Nobody wants to really sell a lot of them. Home Depot getting hurt, as you know, because people, if you don't sell homes, you don't remodel homes, especially existing homes, right? And that hurts Lowe's and other companies like that. EIA weekly petroleum stocks, we'll get that at 9:30, and we'll compare it to the API numbers that came out. Net about a 3.8 million barrel draw. Net takes into account the distillates, gasoline, and the crude itself when I add that all up. All right. So this is about the metal markets. Now, the one thing that you can't argue, you can, but you're not going to win the battle, is inflation is sticky, and it's still here, and the PPI showed that to be the case. I don't care if you want to be a naysayer and find a way to tell me, yes, Ira, it's peaking. Okay, but it hasn't peaked. You haven't proven to me that on this last round. I agree with you from where we came from, it has come down sharply. But we've hit that stick-in-the-road area. Does the Fed have to raise rates again to get it going? Well, again, the Fed chair said today that they're not foreseeing that at this point in time. They believe time will work in the favor that the restrictive interest rates will drop back the inflation. Okay, they also need labor to help them with that. I think you realize that. When we look at the gold market, you can see that the market just sort of hanging. It's been here for a while, hasn't gone anywhere. This is a weekly chart of closes. Certainly for the past 4 weeks, you haven't really done anything. When you come to a daily bar chart, what's the pattern here? Well, I know that you have magic. I don't. So when I look at this, I put on a swing line study, and I can tell you that the near-term trend is up. Why? The definition of an uptrend is higher lows, higher highs. The brown line is called a swing line study that I devised many years ago. It looks at the current bar from here backward, 1 bar. There's 5 rules. Do you plot the line up or down based on, do you have a higher high? Do you have a lower low? Do you have an inside day? Do you have an outside day up, an outside day down? And with those 5, which cover all the variables of what chart action today is going to be, I predicted where you draw that line so I can be consistent in my analysis. You may not want to use this, but for me, is the market in a trend or not? The definition of an uptrend, I'll argue with you till you're blue in the face. It is basically a series of higher lows, higher highs for up, lower highs, lower lows for down, and a higher high and a lower low in some fashion for no trend at all right? Not a stepping ladder, up or down. This is bullish at this point in time unless the market decides to come back and take out the 2337.60 level. The market has also been over and staying over so far what I call the line in the sand. For me, chartists like to divide charts up, and moving averages are one of the favorite tools. They're not forward-looking, they're backward-looking. They're made up of prior data. They're not telling you what the average is going to be tomorrow. I'm sure somebody can do that, but it's not how it's used, and that's more important. So right now, the support, as you can see, is the 2336.90 level, the 18-day average. Where's the resistance? Above the market, it would be the Bollinger Band at 2376.70, far away from the all-time high, but still a bullish condition. Where's momentum? Coming up, is it overbought? By my definition, any reading over 70 is overbought. So I see an overbought market quickly approaching resistance. If it gets under 2337.60, I have problems in that it will lose that bullishness about it. When I look at the differential of taking an area chart of the gold-silver ratio, basically I'm trying to find out by dividing one into the other, how many ounces of silver does it take to get an ounce of gold? If the number's falling, just think of the logic, as it goes down from 83 to 81.96 to 80, whatever, it means you need less silver, so silver is more valuable. So it tells me right off the bat from my thinking that I look at silver as the better opportunity. But now it's overbought and you're right up to the Bollinger Band. How often do you stay over a Bollinger Band? 5% of the time. If it's a narrow band, like you get into these areas here, then you get a different game. Because think of this as winding up in a pipe like a base, and it's going to blow out of it one way or the other. But when you get big broad bands like this, no, when you hit those bands, you pay close attention, and we teach that in our education area of our website, iraepstein.com, under education. You might want to take a look at the enhanced Bollinger Band. In the copper, you've been staying over the upper band. There's a squeeze on. You've got also a natural play going with Anglo American, now saying it's going to divest itself of diamond business, coal business, other businesses, and just be a pure copper play. Because what's happening is with the AI craze in electric vehicles, forget everything else, but everything else matters. You're going to have more demand for copper, and you don't have the above ground. The easy copper's been gotten. So now you have to go about it different ways. I've written about it and given so much on this to the market since the beginning of the year. I even explained how some of these deep pits, and I think it was Chile, how they're underneath them, not at the bottom of the pit. They go under them to find another way to get to copper. It's expensive, but there's riches to be had down there. When you come into the platinum, suddenly people are realizing a couple of things. Number one, diesel and combustion engines are not going anywhere. Yes, we're going to be making less of them in America. Yes, in other parts of the world like China, they'll phase them out much quicker than we will for fully electric. But to get fully electric there, you got to buy copper because you need to have charging stations everywhere. Well, in the platinum and palladium market, for those countries that aren't embracing the economics yet of EV, because it's simply not there, you still need platinum and palladium, and they are in basically shorter supply, and you have to have them for those cars. In the dollar, the market is now strange, and that's the right word. You would think that strong PPI, strong inflation would support the Fed keeping interest rates high for longer, and with inflation high, that the dollar would be getting a bid. But it hasn't been recently. It's got a clear pattern of lower highs, lower lows to supports 104.68.60. So the question is, has the market peaked out? Is the market saying the U.S. economy is tipping over? Or is this just sideways action as the market gets ready for another move? I can't answer that. I can tell you in the short term, the bears have total control of the market. Taking out today's high of 105.38 would be the first indicator you've caught a group here that got too short and the market might want to bounce hard. So be careful with that. So you put it together, you come up with game plans. And I have one for you. It's pretty simple, and it's free. As you know, we have a group of free offers. Now, if you take a look, I'm going to give you a quick definition of each one on the screen, and no, I'm not going to read them for you. But as you see them, if you click Select Offer, if you go to our website, iraepstein.com free offers, it'll put each one that you select in a basket. This is how the web page looks right through here. You pick and choose what you may or may not want. It'll go from there. By the way, I know I said I was going to do special reports. When I saw the PPI, and I know CPI's tomorrow, I said I'll do 2 of them tomorrow, and that's my goal, to knock off 2 for you tomorrow in special reports, special videos on things. Modern Trader will be here with their trade ideas, and you get the tips from pros and everything. But again, it's all here for you to choose from. Our free Pivot Point video series, the Arun indicator, the video series on that, charting software for that. You can even get access, if you haven't tried, my written research and my videos, my morning subscriber videos. I charge $60 a month for it. You can get free offers to that. So all you got to do is give yourself a try with it. You go to iraepstein.com, free offers. You can move your cursor right to the top. When you get there, you'll see that we have at the bottom of the page, you're going to put in your name, your email address. Just click Start Me. Comes to us, and within 48 hours, business hours, we normally get everything out to you. I'm Ira. You have yourself a good evening. I can't wait for CPI. I intend on putting out the morning video, the flash video of news. First thing in the morning as that number comes out, so look for it earlier than normal. Take care.